Walk me
Thanks for
through
having
what
me.
you think we can see today. Are we talking about some kind of positive news on the street, do you think, even in the face of these job numbers?
Well, I think the job numbers themselves are going to be negative news, but you know, and I know that Wall Street will react through the job numbers and see the positive on the other side. I think one thing that Secretary Mnuchin did not mention is that the Fed has injected in the last 3 weeks about $1 trillion. So they did $331 billion a week last 3 weeks. Just to put that in context with the 2008 financial crisis, they're moving 15 times faster as it relates to their capital deployment. At least, and so that is a very bullish sign. It is now showing up in the markets. Obviously, the plateauing or the flattening of the curve is certainly helping. But at the end of the day, this is a don't fight the Fed market, and you're starting to see that market recovery. I said a couple of weeks ago on your air, I thought we had seen the March 23 low would be the low for this crisis, and it certainly feels that way now.
Yeah, interesting. When you were last on with us, you were saying there was about 10 to 15% still to go before we reach the bottom of the cycle there. And I think we pretty much hit that. So you're more optimistic now on equities. But Mark Cuban was talking to CNBC overnight as well and saying that people are optimistic on the market right now. But what they're not factoring in is what we're going to see on the other side once we emerge from this, once people can start leaving their homes, and what the long-term damage is going to be to the US economy. Would you agree with that? And how do you see then the markets trading post, of course, lockdowns?
Well, I did see Mark's interview, and I think he's making sense about the near-term transition, the difficulty of getting people away from the notion of social distancing back into sports arenas and restaurants and things like that. I understand that, but I want to take everybody through the numbers. You have $10.4 trillion that's being injected into the US economy. And if you look at the losses of economic output, it's about 3.7, $3.8 trillion. And so literally they are overwhelming the economy with almost three times the money, and they'll likely go higher than that. And so I think Mark is explaining the near term reality and some of the frictional pain. I don't want to minimize that pain for lower and middle income workers, or certainly the personal tragedy of the deaths that we've seen here in New York. It is almost impossible now, given the number of deaths, for us not to know people that have actually died in the crisis. So I'm not minimizing that, but I'm really just looking at it as a financial analyst. This is my 31st year in the business. I've seen 9 crises. This crisis will end, and this is an unbelievable amount of money being injected into the
So
economy
the
by
president, Anthony, are they
the
doing too much or too little?
well, I think they need more helicopter money, to be candid. I mean, we did that analysis. It's about $3,000 a person and $1,500 for a child, and they're offering up 1,200 and 500 respectfully. So yes, I think they need to put up more helicopter money. They just injected, or they're going to pass a $250 billion additional small business stimulus, and I predict that they will send more helicopter money to the average American. This will be a Main Street and Wall Street recovery program.